Welcome back to the channel, everybody. So let's get right into the information today. This is from investing.com and it's titled Ripple's Legal Team Counters SEC's Claims in Ongoing Legal Battle. Let's begin right here. Defense lawyer and former federal prosecutor James K. Fallon tweeted an image of the Ripple defendants' response to the SEC's letter of supplemental authority regarding the SEC's motion for summary judgment. Says the Ripple defendants have filed their response to the SEC's letter of supplemental authority regarding SEC's motion for summary judgment - James K. Fallon, April 13, 2023. As a reply to the letter, the legal team for Ripple has countered by referring to a court decision in the District of Massachusetts, SEC versus Commonwealth Equity Services, LLC. The SEC had cited this case to demonstrate the violation of negligence-based provisions of the Investment Advisors Act of 1940 by the defendant, specifically related to disclosure failures. The court in this case had also dismissed the defendant's argument of a due process affirmative defense on the grounds of a lack of fair notice. According to Ripple's response, they argue that the Commonwealth case actually supports their stances. And that's actually what I felt the other day reading just a little tidbits about the case, but I'll let them explain it, as it highlights the significance of fair notice in legal proceedings. They believe that the lack of clarity in the SEC's guidance regarding the classification of XRP as a security deprived Ripple of fair notice, thus making any charges against them unjustified. And even in that article we read the other day, it said that there was ample proof and that whatever judgment occurred, I'm paraphrasing, of course, but whatever judgment occurred, it happened against all of the irrefutable proof. I'm paraphrasing, but that's pretty much the gist of that article we read yesterday. And as I said, that was quite suspicious. Given such and all of the different proof that was obviously not taken into account, it would seem that that would actually lean in the favor of Ripple. But let's continue on here. It says, meanwhile, the letter argues that Ripple had enough fair notice. Well, we know that argument there. Ripple's legal team emphasizes that the court in the Commonwealth case rejected a fair notice defense, despite the SEC's knowledge of the defendant's practices for more than 2 decades. And the absence of any specific rules addressing the conduct. Nevertheless, Ripple's legal team believes that this supports their stance that the SEC failed to provide Ripple Labs with sufficient notice regarding their disclosure obligations. Yeah, I just don't see anything falling in favor of the SEC. Like I said, at a prior time, they're just grasping at straws at this point. There's nothing that I see this in the SEC's favor on any level whatsoever. They're getting decimated. They're getting dominated right now, which is why I believe they're changing gears and shifting focus to the rest of the crypto industry, which are just sitting ducks right now. Ripple is the fighter. Ripple is the Spartan on the front lines. And we will defeat the SEC. We have the greatest chance of defeating the SEC. I think they know that. I think they're already ready for defeat, but they're going to go down fighting. It doesn't matter to me how they go down, as long as they go down. That's it. As long as we defeat them, they can go down swinging if they want to, as long as we win. That's all that I care about. So things are looking good. Things continue to look good. Here's another article here on U.Today. How's everyone doing out there? I hope you're doing good. It's the weekend where I am. I know we have a lot of viewers from around the world. It's the weekend over here, and well, it's beginning, right? It's Friday. So I hope you're all going to have a good weekend as well, okay? Make sure you get some relaxation in, drink some water. This is not advice, some water. Hopefully you'll eat healthy and you'll be safe out there. Wherever you are, be safe, right? Just my humble thoughts. This article is from U.Today as well, and it's titled Pro XRP Lawyer Argues Chances of Ripple Win in Lawsuit. Let's scroll down here and see what they're talking about. Read this little tidbit here. It says, in a thread of tweets, pro lawyer Jeremy Hogan gives a cogent reason why he believes Ripple did not sell XRP as a security. They didn't. The overwhelming majority of the evidence indicates that XRP purchasers did not rely on the efforts of Ripple. Yeah, most people didn't even know about Ripple when they got XRP. The overwhelming majority of the evidence indicates that XRP purchasers did not rely on the efforts of Ripple. No. It says Hogan shares a screenshot of one of Judge Torres's decisions, which provides a clue as to how she might rightly find that XRP was not sold as a security. It says here, Jeremy Hogan, and let me pause before I read this a little bit. I know a lot of you've come into crypto and when a lot of new people are coming into crypto, they're watching YouTube channels, they're reading articles. When I came to crypto, I was still in the stock market. I wasn't watching YouTube videos. I wasn't informed on all of the different companies that were involved. And I think a lot of us from back then are like that. Now, the YouTube crypto industry, the crypto YouTube community is enormous. Then you have like the TikTok video communities. So people are learning about all of these details that were not easily accessible back then. They're very accessible now. And let me tell you something, a few years' time makes a big difference. There's a lot of information out there. So now maybe people are coming in and they're like, oh, there's a company named Ripple. This tweet says this from Jeremy Hogan: the number 2 reason Ripple did not sell XRP as a security. The recent opinion from Judge Torres provides a clue as to how she might rightly find that XRP was not sold as a security. First, look at the version of the Howey test that she cites. And then he has this here. Let's see if I can make that larger. It says, the issue is, in this case, is whether defendants offered to sell or sold XRP as a security. Specifically, the SEC alleges that defendants sold XRP as an, quote, investment contract, which is a security defined under the Securities Act, 15 USC 77BA1. Defendants argue that they did not sell XRP as investment contracts and therefore no registration statement was required. Ripple answer: the Supreme Court held that the test for an investment contract under the Securities Act is whether the scheme, quote, involves an investment of money in a common enterprise with profits to come solely from the efforts of others. So now let's scroll down here. It says she addresses the issue in the case as to whether the defendants offered to sell or sold XRP as a security. The document added that specifically SEC alleged, well, we read that part in the actual document. Let's scroll down here. It says the 3 prongs of the Howey test were listed in a sentence that explains the, quote, test of the investment contract. Quote, the Supreme Court held that the test for an investment contract under the Securities Act is whether the scheme involves 1, an investment of money, 2, in a common enterprise, 3, with profits to come solely from the efforts of others. To argue prong 3 of the Howey test, the SEC retained its expert witnesses. However, the SEC's expert witness 1 testimony was overturned. Okay, we're going to stop there. You want to read the rest of that, which is a very good article. Once again, it's on u.today. All right. They have the next section here is titled Ripple Should Prevail in Lawsuit, but I'm going to leave that there. You want to read that? You can head over to u.today and give them some traffic over there. Okay. So now, Finclusive at the end of March announced that they will be working with Cross River Bank. Coincidence? I don't think so. And there's an article actually about it on businesswire.com. It says Cross River and Finclusive partner to strengthen the fintech ecosystem and increase responsible access to financial services. It says Cross River Bank, a technology infrastructure provider that offers embedded financial solutions, today announced a partnership with Finclusive, a global compliance as a service CAAS infrastructure provider for financial services, to provide account and payment services to advance secure and compliant access to the financially underserved. Sound familiar? Regulatory compliance, quote, regulatory compliance, responsibility, and transparency are central to Cross River, and we continue to expand our partnerships with technology leaders focused on increasing financial access. What's important here to me is that Stellar is connected, even if it's vicariously, to another bank. Going right, let's go back here, all right? Let Finclusive tell you. Finclusive released this tweet the other day simultaneously with Stellar. Says, we've been working with Stellar Org and ANCLAP to explore the use of stablecoins and blockchain for faster, more affordable, and more compliant remittances. And then we have an article here. This is on CoinDesk.com. This shows you where everything is going with the tokenization of everything. Who will be the last one standing when it's all said and done and dust clears and regulations have crushed most of the crypto industry? Maybe XRP, XLM, Algorand, Hedera. They're all compliant. They're all in bed with the governments. But I don't need to tell you that. You already know that. But in saying that, understand that they will be the biggest benefiters of tokenization. Now, this article goes as such. Tokenization of real world assets, a key driver of digital asset adoption. Bank of America. So Bank of America, the other day, we heard from Citibank about tokenization. Now we're hearing from Bank of America. Okay, both of these companies are in deep with the bank coins, right? But let's read this little tidbit here. It says the tokenized gold market reached over $1 billion in value last month, the report said. The tokenized gold market surpassed $1 billion in value last month as the tokenization of real-world assets gathers pace. Bank of America said in a research report on Thursday. Tokenization is the process of putting ownership of tangible assets such as precious metals on the blockchain and offers the convenience of buying and selling of these assets around the clock because the transactions do not involve traditional brokers. Bank of America sees the tokenization of real-world assets such as commodities, currencies, and equities as a, quote, key driver of digital asset adoption. Let's scroll down here. It says, before the advent of tokenized gold, investors seeking exposure to the gold market could buy exchange-traded funds and futures, or those looking for exposure to physical gold could buy it through dealers. Quote, but these investment vehicles come with some drawbacks related to cost and / or liquidity. Definitely right about that, the report said. Quote, tokenized gold provides exposure to physical gold, 24/7 real-time settlement, no management fees, and no storage or insurance costs, unquote. This is going to be major in the future, as I believe a lot of people are going to retreat to gold, even more than what you just saw. What you just saw with that little bit of a banking collapse is nothing but a sample. In the future, as world economies have more and more problems, especially with the United States debt, the global debt, of course, the possible resetting of certain financial infrastructures as they collapse. You have over 200 banks at risk of collapse right now. If anything happens, if there's even a minuscule bank run, that will just turn into a tsunami for those banks. And then, of course, those banks will have their own ripple effect. So these are things to take into account, because when people retreat, if they retreat to gold, whoa, Nelly. So let's continue on here. It says tokenizing the precious metal could increase liquidity and enable investors to rebalance portfolios quickly and efficiently, the note said. Tokenization of the gold supply chain could benefit ESG-focused investors that need proof that gold came from a specific mine or from a specific region, the report added. All right, so now let's move on here. So now this article here is from financemagnates.com. It's titled, The Geopolitics of CBDCs, Implications and Potential Power Shifts. So let's scroll down here. It says the rise of central bank digital currencies is soon becoming one of the most significant financial developments. CBDCs are blockchain based. Well, we know that. Let's scroll down here. I want to see if they're saying something here. It says CBDCs have the potential to transform the financial environment by providing a safe and efficient payment option. Keep in mind, they don't have interoperability, which is why you had a post from Ripple the other day saying that James Wallace of Ripple will be speaking on tying all of the CBDCs together. Ripple, XRP, the agnostic bridge currency, tying all of these together. Of course, Stellar is going to attempt to do some as well. You have Algorand providing interoperability as well. So tying all of that value together obviously is going to have some sort of impact, should have some sort of healthy impact on the prices of those particular assets, but we will stay on top of the different catalysts and we'll go from there. We adjust accordingly. So that's an important thing to keep in mind when it comes to CBDCs. Sure, there's a lot of controversy around them, rightly so. I wouldn't trust any of these entities whatsoever, but many people are going to make lots of money off of these things and be able to free themselves from these particular harsh circumstances and systems that they may not agree with. But let's continue on here. So CBDCs can allow near instant transactions, lower the risk of fraud, and provide more cost-effective means. That stuff we know. It says potential power changes. CBDC implementation may also result in substantial power shifts in the global financial environment. Here are some examples of prospective power shifts. Central bank power. With the advent of CBDC, central banks may become more powerful due to increased control over the money supply. This could result in a power shift from commercial banks to central banks. Now, remember, this is key. Remember, I told everyone there's a war going on between the small banks and the central banks. The small bank, well, we read it for ourselves, but there's a lot of new people here on the channel. We read the documents. where the Bank of International Settlements had to address the small banks. The small banks were reaching out, they still are. And they were saying, hey, listen, are you trying to step on our toes? Are you trying to deal with our customers directly? Bank of International Settlement said, wait, no. We just want to deploy the technology. You go ahead and keep doing your job and run everything. Deal with your customers, deal with the capital. We just want to deploy the technology. What? And the small banks never truly believe that. So there's still a lot of tension to this day. Not to mention when that bank collapse just happened recently, a lot of customers left the small banks and they did what? They went to the big banks. There's a battle going on. Now, how is this significant when it comes to the bank coins? It's very significant because the bank coins will provide the technology to do what? What did they used to say? They used to say, have a phrase that was called, how did they say it? Leveling the playing field. They will level the playing field. Those smaller banks can utilize Ripple, Stellar, Algorand. And when they do, they will level the playing field. They will save costs. They will save money. They will have traceability. They will be able to issue payroll. I mean, there's so many different things that they can do at almost no cost. They can run their metaverses, right? They have their banks inside a digital world and such like that, if you don't want to say metaverse. And they can save a ton of money. There's thousands of branches closing of banks, right? I put that document out there, didn't I? Maybe that was in the members only section. Anyway, so they're going to cut costs that way as well. There will be a feeding frenzy, theoretically speaking, if they're wise, and it looks like they are. There will be a feeding frenzy amongst the small banks sometime in the future. I don't have a timeline on this, but sometime in the future, look like it's going to happen soon. When it comes to the DLTs, the respected DLTs that will be standing when all the regulatory dust settles, that definitely should have a huge effect on the price of those assets. This is one reason, this like war that's going on is one reason that these assets are a long hold. These are not quick money plays. Everybody should know that. But it's because as this chess game is going on within the system itself, different movements are made. And so it pushes, sometimes it speeds the timeline up. Sometimes it slows the timeline down. You have to be very adjustable with these particular assets and just keep a visionary mind state and stay on top of the catalyst. These assets definitely are not for everyone. Only the strong, let me tell you, only the strongest mentally are going to be able to be at that moment. If we make it to that moment, if that moment arrives where the explosion happens, I believe that it definitely will, but that's just my humble opinion. That's not financial advice. I'm not trying to convince you of anything. That's just my personal belief. That's all. Okay. So it says here, currency supremacy. This is key as well. It says if CBDCs are extensively used, they may result in a shift in currency supremacy. For example, if the United States introduces a CBDC, it might further enhance the dollar's dominance as the world's reserve currency. Yes, but it works in the opposite way also, doesn't it? The BRICS nation is working on a collective common currency among them. They represent a huge swath of the Earth's population. If they are able to issue that a common digital currency, and now they're reiterating that they would like to back it with gold. I have to actually see that. But if they were to back it with gold, they would become the dominant currency on the planet Earth. It would have a huge impact on the United States dollar. And let me tell you something else. That also would lend to the rise of the new financial system and the deployment and the necessity of deploying the new financial system within the United States, theoretically speaking. And those prices would rise off of that as well, right? Because, well, that's very complicated. We'll go into that another time. But let's read this next bullet point here. Economic influence. The usage of CBDCs may also improve countries' economic influence by allowing it to bypass traditional payment channels and more efficiently facilitate cross-border transactions. Well, that stuff we know about. So now let's move on here. Trying to get through as many of these articles as possible. So this article here is from financialpost.com and it's titled Dollar Yields Gain as Expectations of Fed Rate Hike Increase. And it goes as such. Treasury yields rose and the dollar index bounced off a one-year low on Friday after a decline in U.S. retail sales suggested the economy is slowing, but not fast enough to stop the Federal Reserve from raising interest rates again in May. Let's scroll down here. It says stocks on Wall Street fell and gold pulled back sharply after surging the day before to a more than 1 year peak as markets struggle to understand when the Fed might pause and later cut rates as it fights to curb high inflation. Traders of futures tied to the Fed's policy rate increased bets that the U.S. central bank will raise its lending rate next month by another 0.25 percentage point and pushed out to late this year a rate cut as typically occurs in a slowdown. Investors face a different set of circumstances than the past 30 years when after 6 months of rates peaking, the Fed would cut, said Malarkey, managing director of investment strategy and asset allocation at SLC Management in Boston. Quote, the playbook is a bit outdated, Malarkey said. Quote, the economy we have going is much stronger and much more different because of labor shortages than it has been in other typical cycles. Retail sales fell 1.0% last month, the Commerce Department said. Data for February was revised up to show retail sales falling 0.2% instead of 0.4% as previously reported. Okay, so now let's close out here with a little bit of gold news. I'm going to take a nap after this. I'll hang out in the comment section just for a little while. Then I'm going to take a nap and get some sleep, everyone. I'm just tired today. You ever have those days? It's been a heavy week, a busy week. I'm feeling it today. I hope you all are doing well out there once again. Appreciate every single one of you. Shout out to Matthew. Shout out to Ahmed. Shout out to David Bullion, Asti, Alcadeco, Infinity Warrior, Voltaire the Vulture, Old Man Crypto, New Anomaly. Trying to think of everybody's Z-Rex. Now my brain is starting to just, you ever just go blank? Okay, let's close out with a little bit of gold news here, all right? So it says here, gold prices went down almost 1% to 2020. 2020, my goodness, that's how you know I'm tired. $2,020 an ounce on Friday as the dollar rebounded slightly and as investors continue to adjust their expectations for the monetary policy and the economic outlook. The Fed is still seen delivering a 25 basis point hike next month, although there are increasing expectations it could pause the tightening cycle after that. Despite Friday's fall, the bullion is up 0.8% on the week and holds close to the levels not seen since March last year. Prompted by a weaker dollar, and prospects that major central banks, especially the Fed, are near the end of the tightening cycle. The Monetary Authority of Singapore kept its monetary policy unchanged on Friday, joining other central banks from Australia, Canada, India, and South Korea that already halted rate hikes. A rally in prices made physical gold buying unattractive across major Asian hubs, dampening the sentiment ahead of a key gold buying festival in India. In top buyer China, bullion changed hands at a premium of $1 to $5 an ounce on spot prices, down from the $26 to $40 premiums charged last month. In India, dealers also offer discounts of up to $22 an ounce over official domestic prices versus $32 discounts last week. India's gold imports, which have a bearing on the current account deficit, fell about 30% to USD 31.8 billion during April to February 2023 due to high customs duty and global economic uncertainties, according to data from the Commerce Ministry. So, now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.